left to go like a 1% loss on one of them. It was Home Depot, actually. I still like the stock. I don't feel like this is the time where I want to take any risk at all. I mean, to the downside when I'm long. I'm prepared to take a little risk to the downside. Now, what we're beginning to see is something that I'll explain in a moment. So, let's see, how do I do this? Before I forget, I want to do a couple of things. I was interviewed last night by Daryl Martin, a really nice interview, and I thank him for that. He was talking about a trade that he was looking at, and he was talking about the 10-minute gold chart. I think it was 10. Just for the moment, I've got it here. I don't want to change screens at this point. I've got the 5-minute chart. It doesn't matter. I'd spoken to him and said it doesn't matter what time frame you're using. Now he's got this fabulous way of looking for extensions, either up or down, and so we're looking at the resistance points that it breaks. So using a certain calculation, he'll get the extension on the upside, one deviation, maybe two deviations, whatever it is. And then when it reaches that point, he says, okay, that's it. At this particular point, I'm prepared to either take profits and reverse. So he's got this fabulous system that he's developed that's automated. Mine is not automated, and one of the reasons is that the human eye can do a lot quicker calculations in certain patterns, not in the pure numbers, but in patterns that a computer can do, because a computer will have to give you a number of alternates, and that's what I found. At least that's what I found with my with the way I've tried to work with engineers on this. So if you look at this gold contract 5-minute chart, it goes right to this. I want to just to look at the screen. I'm going to make it a little different color. I'll make it. Let's see. I'll make it. I'll find a color right now. Let me just show you something. I'm going to go to. Oh, I wish they would have an orange here. How do you make orange? I used to be in the arts, so I should know about that. Orange, not there, not there, not there, right there. Ah, orange. That's. Oh, I had it for a split second. Orange. So there it is, kind of an orangey color right there. And I'm going to make it thick because I want this to show up. I want to explain why I look at different things, the reason for it. There. That thick line that you can see, if you're looking at the Tiger Technicians Hour, if you're looking at Tiger One, and remember these programs are all archived. This will be archived on Channel 11. I have the 11 o'clock show. It's Channel 11. Now, oh, December. No, oh, my engineer was playing games with me. He typed in December. No, I know it's November. I know it's November the 9th. I should. Okay. Now look at this. I haven't been able to switch this around. I will. You see that sign that says MACD? You see this one that says slow stochastic? You see this yellow line? These are very important. You see this maroon line here? You see the letters? Look, I subscribe to a particular methodology that I developed a long time ago of identifying the most obvious lowest low bar. This is just the easy way of saying it. And from then on, you can calculate each successively higher peak. So in the gold contract from yesterday it's today, on the 9th, at 2:50 this morning, it starts a rally that goes to peak A, and that starts off at 1730.90, and then it goes to peak A at 1733.40, goes down to 733.20, so that's peak A. Then it has a parallel high bar, and then it pops just a tad higher to 1733.60. That's B. Pulls back. Goes to leg C. Pulls back. Goes to leg D. That's at 4 o'clock this morning at 1737.50. Pulls back. Holds the 9-period exponential moving average. Now, what I do when I teach my courses, I explain what you can use as comparable measures of time, but in different, you're motivated by a different, not necessarily a look-back period, it could be, but a different mechanism of calculating. So I like to use the exponential moving average, but you can add a simple moving average. Or you can maybe move it out a little bit further. You go from a 9 period to a 14 period. And what happens is it gives you fabulous identifications of a sustained move. So that's what I like to teach. So then what it does, it goes to that extended leg E up, and it goes to 1737.80, makes a double top with a doji candle at 1737.70, 10 cents lower. And the MACD and the stochastic drop sharply. And what does it do? Because a ChapmanWave takes you from a buy signal to at least a peak D or an E, or even can go to an F, even a G. But when you get to D or E, you want to be very careful, because that's when you can have the deepest pullback. And look what happens. I don't want to go through it now, but it gives you a beautiful time price move to the downside using the ChapmanWave inside wedge. Comes down, starts a brand new move this morning at 1728.70, and that is at a quarter past 6 this morning Eastern time. Then it goes peak A to B, and then stochastic is way under a very important level that I like to explain as what it needs to hold. So it fails to get there. MACD is still rallying. So what happens is, based on the stochastic, it drops sharply, and it makes a lower low. Then it starts a brand new buy signal and goes to peak A, B, C, D, E, and even to that F that I was speaking about before. And the F comes in the left side, right side price time match in a cup formation, together with another pattern that I love to look at, and that is the unsuccessful test of the pattern that I call the dreaded H, but it becomes a successful one if certain conditions are met. Now look how it works. It's way up the 9-period exponential moving average. Then this morning I heard Daryl with Steve saying that he had actually gone short. Well, going short was exactly what you wanted to do. Why? GCZ12. Look at this. It doesn't matter what time frames you're looking at. The most important thing is you look at your time frames and you say, hey, what's going on here? It goes to a peak in the 2-minute chart, fails to make a new high. That's called a right shoulder failure. Stochastic hasn't gone above 80%. The unbalanced volume turns around. The MACD is way lower, and it plunges. I've got you a great trade, Daryl. That's really nice. So I like to say that a robust system means that you can take any other system that's developed, and what you have included as part of your program. In my case, I don't have a program. I have a system because it isn't programmed on a computer. It's visual. And all you need to do is follow the rules. And the rules say, peak D, fading stochastic, get out of your trade, and you can reverse trade. And then all of a sudden, the 9-period exponential moving average, instead of walking the 9-period exponential moving average, instead of having your support level based on another moving average underneath or on top, it flips around. Suddenly, that other that other tool becomes the tool that says, be careful, because this is making rallies that could fail, and there could be a price time match that says that somewhere around, there's a 2-minute chart, it's already too late for that, somewhere around 11:14, you could get a pullback, and if that pullback starts to take out the 1728.80 low, you've got a full arch formation that's gone back to the very beginning, and that beginning would have been at 1726.90. So I wanted to just go explain, because I love the fact that what he's developed is something that says you've limited your risk. And limiting your risk, absolutely imperative. You want to survive in this business. I don't know how many of us have done crazy things before, taken real big chances. Sometimes it works, sometimes it doesn't. You learn over a period of years that it is the discipline of planning your trade and trading your plan. Don't ever. Remember, we had a caller yesterday who had shorted a stock. It went against him about 20%. And what I said was, if it comes back to the level that you were looking at, make a decision to either get out and say, phew, thank you for getting me back to even. within 5 seconds, if your analysis says, no, this is going even lower, that's a brand new trade, clear thinking. You haven't got this bogeyman, this trading god sitting on your shoulder, wagging the finger, saying, like I always think of Clinton going, wagging the finger. The wagging the finger saying, uh-oh, you're in trouble. So that's what I like to do. I wanted to show that. I want you to show. Now look at this. This is the E-mini that went down. Here's the E-mini S&P 500 December contract. It goes right to, it actually misses it by a fraction. The 1361.80 is the 200-period exponential moving average support. And where does it go to? It goes today to 1363.50. It misses by 2 points, having at one point been at 1468. That's 100 points. And that moving average, the 200-period moving average, was just sitting there saying, I got time. I'm a 200-period look back, 200 days. You'll get here. And it got there, and now it's bouncing. And the unbalanced volumes giving a nice signal. MACD and stochastic are still saying, be careful. It's only a bounce. And I've got the gray area that I've drawn in there as the whole resistance area. So what we're looking at is there's a good chance that today I will be putting a down arrow for a peak E in the weekly chart. And the monthly chart, let's get rid of this. That monthly chart, well, let's go to the S&P itself, SPX.X. SPX.X, yeah, it's still F/B. I do not, at this particular time, I've done a lot of work on this. Something tells me that that cliff that everyone's looking, I always do this. There are certain times where something happens, and the first thing that comes to my mind is beep, beep. That's the road runner, right? Running over the cliff. And whenever I'm teaching, I still teach clarinet because that was my major. That was my master's degree in clarinet and performance, and I was a professional player and a conductor for a long time. When I'm teaching and a student is sight reading and suddenly does something really weird, I always say, hey, you weren't looking ahead. It's as if you dived off the diving board and you forgot to look down to see if there was water. Beep, beep. So I'm not going to go beep, beep right now. I'm waiting for everything to work out. So,
you take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at tfnn.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and we're going to go. I didn't do this. The Dow is down. Let me just run this quickly. I've got people waiting, but I'll just give you the numbers. The Dow is, there it is. The Dow is up 17 at 12,828. The S&P is up 572 at 1383. Compound is up 18 at 2913. Gold, which was up very nicely, is pulling back. The GLD is down. It's 13 cents at 167.86. And gold, if I can find it here, I've got it unchanged, but I believe I'm behind. I think it's down a little bit. It's 17.26, but I think it's down a little bit. Silver is up nicely. It's at up 26 at 32.50. Bonds are up 23.30 seconds, and that to me is. This is what I've got to keep watching here, the TLT and the volatility index and the dollar. So I'm going to go to those in a little while, but right now, Adamant says, do you see an Xmas rally, Basil? There was another question there earlier on. Two questions. Basil, do you play saxophone? I did years ago. I don't do any saxophone playing. I do play bass clarinet, though. Okay, so we've got, the question is, do I have, I'll try to deal with that just now. This is a scenario that I'm looking at here. First, Mike waiting patiently in New York. Hi, Mike. How are you doing? You got your electricity back. You're all set, right?
Yes, I'm ready to go.
You're ready to go.
Las Vegas Sands. It's an interesting chart to me. I think it's a short. That's my conclusion. But I have this feeling that it's going to rise to about 47.5 first, and I think that might be a better place to short it. What do you see?
Okay. Folks, we're looking at LVS. I'm going to do the big picture first because I think that's really what you're looking at. My big picture says that peak after the ChapmanWave with a double top, this is a stock that once was at 148.76 back in 2007. I would say that it pulled back a tad. It pulled back to $1.38. What is that? That's about a 85 or something percent of decline. That is quite a steep decline. And now it's run all the way in the interim period between 2010 and 2012. It's gone to 55.47 pullback, and then went to 62.09 for that drop bucket pattern I call the double top. But within this pattern, there's something that I call, it makes a cup formation, and then it doesn't make the handle. What it does is it goes more than 50% below the left side lip. That says be careful, because you could quite easily touch the cup low, which is about 36.08. What does it do? It goes to 34.72. So it goes underneath it, and now it's trying to rally. From everything I'm looking at in the MACD and stochastic, I would suspect that this is going to make that pattern that I call the dreaded H. In other words, the monthly chart is going to make, here's your left side of the H, lowercase h there. And then it does this. It tries to rally, and then it fails, and it makes that formation. Can it go a little higher? I would say that if it went more than, you're thinking maybe 4 points, 3 to 4 points. My thinking here is that if it goes more than 3 or 4 points higher, that's going to improve the MACD and the stochastic, which is at 81% in the stochastic and the weekly, and the MACD is rising, but not great in the weekly. So my bias right now is to lean towards the short side, but we've had a tremendous decline in a very short period of time in the market. And if you look at Las Vegas Sands, it's held quite well. So although my bias is to go short, I'm with you. I want the right. If you weren't short already from about 45, 49, which means that all you need to do is lower your buy stop. Now the risk is that there could be a pop-up that does go to that 200-period exponential moving average in the daily to 45, 49. And the other thing is this. So you short it, let's just say you short it somewhere around 43.60 to 44.50, right? Just for argument's sake. It's got tremendous support anywhere between 41 and 40.50. So it's about an 8 to a 9, maybe a 10% gain with about a 3%. You can 2 to 3% risk if you do that. So this is what I'm going to recommend to you. Because it looks like it's in a trading range, it's not as impressive as a short unless, when are earnings coming out, you know? They came out about 2 weeks ago.
Yeah, they were pretty poor. I mean.
Okay. I think I have the plan for you. Hold on 1 second. We've got this break coming out. Very important break here at TFNN, a commercial break. I'll go through that. I'm going to give you the boundaries that I would look at going into next week, Tuesday and Wednesday, and then we'll be back with another Mike from Ormond Beach. Basil Chapman, Tiger Technicians out.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, the 9th of November, and it is the Dow's up 31, S&P's up 7.5, and this is very important to me. We're looking, this is typical of many charts. I'm on with Mike in New York. We're looking at LVS, wants to know where he can go short. That's his bias, and my inclination is to agree with him on the bias there, except you need a really good price. Why? Because in the 120-minute chart, it has gone down to 42.63. That was on the at 15:30 military time on the 10th. And then it ran peak A, B, C, D, E, F, pulls back, beautiful doji candle, peak A, B, C, D, E on the upside. Remember, these are peaks. This is not A to B equals C to D. It's got nothing to do with that. I've labeled the peaks. I wasn't initially going to call them peak 1, 2, 3, 4, 5. This was the time of Elliott wave when Prechter was everywhere back in the 1980s. And I said, I don't want this mixed up with anything. I'm not even sure about the Elliott wave, although I had studied it. This is so clear. It's just completely different. So I call them peaks, peak A, and on the way down is trough A, B, C, D, E on the way down. So what it's gone to is a gray resistance area, and then it pulled back. Now it's in what I would call the support area. I'd call this green. Don't have time, but it's gone to a lower low in about 2 bars too soon, but it's snapped back again. So, Mike, this is what I'm going to suggest to you. Keep this on your radar as a short, and start a short position if it rallies towards the 44.60 to 45.50 area and then makes a U-turn. At any point, if it makes a U-turn, you short it, put a buy stop just a little above your entry, the high that it had just made. If by Tuesday afternoon or Wednesday morning it has failed to even get to 44.30, it's at 43.61, and hold, I would say start a small position. And the reason being that looking at the 120-minute chart, it's been so accurate that it's saying to me that the M formation that's made at the top It did not break above the high of 47.59, that high back in September. It only went to 47.20. So I think that this is making lower highs and lower lows. And the next time it starts to reverse, the most important thing is if it breaks anywhere underneath 42, very quickly, I think it can go to 40.50, which is the low on the 5th of September. That's the way I would trade it. I wouldn't be phased by anything other than a small position on a arch over. As soon as it starts arching over, that's when you can set up your position. If it fails to get there, I think you've got a very high degree of comfort. So I hope that helps you.
Yeah, very much. Thank you very much.
Thank you for calling. Let's go to Mike in Ormond Beach. Hi, Mike. Thank you so much for waiting.
Sure, Basil. Basil, I'm looking at the IWM and the TWM, and I see we're getting a little bounce now in the markets.
Yes.
So do you think now would be a good time to look for a place to get into the TWM?
Okay, the TWM is a 200%. Let me just give it here. I don't know if I've notated this. Yes, I have. This is interesting. I have on my daily chart of TWM, which is the ultra short Russell. It's gone to an extension. It went to peak from the low bar of 24.99. Let me expand this so that you can see it. There you are. From the low bar of 24.99, it went to a peak ABCD, pull back, and then very quickly, holding the 9-period moving average, it went to a leg E and then a peak E at 27.93. Then it pulls back, and this is one of the things that I'm looking at here. I'm going to put the down arrow on this, because no, thank goodness I did that. I was being very careful. This is what I'm looking at. There's a chance that peak E has gone not to an A and a B, but an F/A. You see, this is what a computer would have a tough time doing. A G/B, an alternate wave. My thinking here, because the DXD, let me just, if you don't mind, I'm just going to jump to a couple of the double shorts in the other indices. The DXD has gone to a peak D, leg C. So that says to me, based on other things that I'm looking at, that there's a very good chance that there's going to be a counter-trend rally here. You're going to get your peak C in the DXD, and in your IWM, so your TWM, that would correspond to G/B. And then there's going to be a pullback, which would be a rally that could start. I got a feeling with the Obama discussion this afternoon at 1 o'clock, whatever it says, there's going to be some kind of a counter-trend rally. Mm-hmm. But I'm also looking for another pullback and then another low. I think it's too soon. There are just too many people wanting to play the upside. So you're looking for you're looking to go long the bear side, correct?
Correct.
Okay. Now, a chunk of the move has been made. All I would be looking for, based on my DXD, I shouldn't say my DXD, on the DXD, which is the inverse of the Dow, is a pullback and then another peak, and that takes you to D, so that there'll be a rally that everyone thinks is the rally, but it's not. Then there's a lower low. Now, that also corresponds, if you look at the volatility index, that corresponds, we haven't got to leg D yet, and I'm expecting leg D above 19.65. And we're only at 18.05. So I think on a very short-term basis, I wouldn't buy the TWM right now, but I would buy it if the IWM, that's your route, right? The Russell 2000.
Yeah.
If it bounces towards the 200-period moving average is at 80 point, it's been covered. 80 point, let's call it 80.20. If it can go to 80.30 to 18.50, 80.84 is the resistance of the IWM. And I suspect, based on the work that I'm doing now, that there will be a disappointment and another pullback. And so you might just only have a very quick trade. Mm-hmm. The trade might be that you're basically shorting you're going long the TWM, but based on the IWM, you're shorting somewhere around 80 between 80.30. It might even get to 80.66 if there's a sudden spike to the upside in the market.
Mm-hmm.
And then I'm suspecting we come down, and if we take out 78.70 on the IWM, the next level of support will be 78.89.
76 area.
That would be the gap area, around about 77.65 to 76.25, somewhere around there. So that's kind of what I'm looking at. But I'd be hesitant. Unless you're looking at more intermediate term, I would treat it as a trade. And all I would do is I'd say if there's a very strong pop to the upside in the IWM, as it starts to curve around and you watch your TWM, hopefully it pulls back. It shouldn't even get to 28.41, which is the 9-period exponential moving average. But if it gets close to that, then starts to rally, then you've got yourself a nice move for a leg up. If there's a very strong smash next week to the downside, the TWM could go all the way to 31.69. But I would go one step at a time, and the very big resistance we've just gone above it is at 29.61. Today's high is already at 29.87. So I would hold off. I'd have a little patience, wait for a rally. Maybe by the end of the day you get the rally, then over the weekend everybody says, oh, no, wait a minute, it's not so great. And then the market comes down again Monday. But whatever it is, I suspect there are just too many people wanting to go long, and that the longs will fail as we start to make lower lows. But I'm anticipating, based on the action of General Electric and a couple of others right now, that there could be a nice bounce later next week. In other words, if we make one more new low, let me just explain something to you that I'm looking at here in the Dow chart. The Dow, I had said to subscribers this morning that 12,778 will be the target to the downside. We've got to also assess how the three bears are moving. Well, the TLT is the three bears being VIXY, Bondi, and Dolly. So the TLT right now is at, I should go to the white chart, doesn't matter. The TLT is making leg D, possibly peak D, but it's getting stronger in the technicals. The volatility index, VIX.X, is failing here. It's down 43 cents. So that says it's going to have to work hard, but I suspect it is going to go above 19.65 sometime early next week. And the other one is the dollar, and the dollar right now is in leg D. So you can see all the little ducks are set up to say a couple of fake moves to the upside could be, and I've also got my ChapmanWave trend index, which says that there should be a 6 to a 9-point rally in the S&P, which in fact we've had from the low today, even much more than that. So that's worked very nicely within 2 days. This is the second day. So now we're getting this counter trend rally. That's what I'm looking at. So just to review real quickly, if the IWM pops and it gets over 80.09 is the resistance, is the 200-period moving average, anywhere towards that 80.84 area, that's the 9-period exponential moving average, and then starts to fail. The moment you see it fail, you can grab the TWM. I would have a tight stop, and I would add to it if the IWM starts to sink and then goes below 79.60. I would keep adding, at least to see a lower low below the low that you've got at 78.70. It's a little complex, but you've missed the most. Have you been in it at all in the down move?
Well, I do have some, and I was wondering what your outlook and parameters would be for it. So.
That's a little different. If you've got some, for now, at least keep it as your core. This other one would be a trading position, so make it smaller, and I would only add to it if it makes that arch formation. Okay. Hope that helps you.
And something else too, Basil, for the amount of downward move we've had in the Dow.
Yep.
Don't you think the VIX, should have been up higher?
I spent quite a bit of time. In fact, my whole overview and market today section in my Traders Corner, in my opening call, I have about every day 6, 7, maybe even more charts, and I always show the same ones every single day with the change of yesterday's price. when I looked at that, I explained, I spent a lot of time explaining what I'm looking at. What I'm looking at in the, there it is, in the volatility index and what it means and what it's saying. And it's kind of complex. I don't know if I've got time to go through it now, but basically what it's saying is one of two things. Either we're in a sustained move down in the market, so the VIX index is just building up momentum to finally get to the 20s, or else this has been a very important pullback. In fact, in some cases, not even a pullback. It's a severe decline.
Right.
And the volatility index is saying there is still internal strength. That's why you've got to be careful, because rallies could be quite sharp and quite severe until it usurps all that energy. So there are two ways of looking at it. One is it's bullish. You don't quite see it if you're looking at the market, but it's saying, hey, don't get too carried away on the short side because I'm ready to have a pretty strong bounce. Or it's saying, you know what, I'm going to eventually go to the 28 to 33 area, so I can take all the time I want because we're going down until December, maybe January.
Right, because it's like there's no fear in the market yet, really. With the way
well,
it looks.
there is momentary fear because the volatility, the short-term trading index hit 278 the other day and 376 the week before. So it's just momentary, and then it pulls back. I tell you what is very important to me. It is the combination of those three bears. If the TLT in leg D, and I show it right here, this is what I show subscribers, the TLT, looking at it right now, is right in that, I don't know if you can see it, it's a pinky zone, right there. It used to be support, then it was resistance, been resistance for quite a while. The TLT is trying to climb out of that. And at any time next week, by Tuesday or Wednesday, if the TLT spikes above 127.72, this is the Lehman Treasury Bond 20-year iShares, it's at 125.39. If it spikes anywhere towards the 127.72 or it goes above it, all of a sudden what we're looking at is that there's a second. Now, this is exactly the opposite. I love the way chart formations appear over and over again. Anybody recognize this one if you're looking at my charts? This is the TLT, but what does it look like? It looks like the exact inversion of Mike from New York's LVS. Look at this. There it is. You see the double top formation? Now you've got a double bottom formation in the TLT. So now this is very important. The TLT on a weekly basis has been walking the red line that I draw. It's called the Inside Track that I'm going to teach in my 2-day webinar coming December the 6th and 7th. Look at the front page for all the specials that you get with it, etc. But if you look at this Inside Track, it's making higher highs, slightly higher highs, but it's making higher lows. You know what? Do you mind holding? Mic dropped. Okay. I guess it was getting lengthy there. But I would like to talk about this particular pattern. I'm going to explain why, looking at the monthly chart. This is really important. I had a question in the den about the technicals and the TLT. I'll be right back. Dow's up 48, S&P's up 9.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. In this final segment, I want to do a couple of things. I'm going to quickly talk about the TLT. It's holding very strongly this up channel, this up track, the red and green lines that you can see if you're looking at my charts. It's a technique that I've developed. It's a potent technique if you can learn how to use it. So this is your gray leg B up in the weekly chart of the TLT. That signal isn't complete. It needs a stochastic to rally strongly and the MACD to cross positive. So far, that red line is really key to hold, but the monthly chart starting to look like, wow, we could get a higher high above 132.21 if certain factors are in place. We'll talk about that on Monday. The other is UNG, a question in the den. That was a question I saw earlier on, and if I can find out who it was, that was Gold. Gold 25 asked about it. UNG is coming down. I'd be very careful about this. This is the United States Natural Gas Fund. Why? Because it's holding here, but there really, if you look to the left, there's no real support. Oh, you can do Fibonacci counts and all that. I want a base of support. So the only place I see it is at 20.13 to 20.05. So in the very low 20s, it's 20.65. That's where I would have a look to see if we can have a bounce. Now, this is what I wanted to talk about. Excuse me. Drink of a... Let's see if the... There, I haven't got a kill switch here. The election is gone. We have the results. We waited 4 years. You started talking about years, and you started talking about months, and you started talking about weeks. Then it was days, then it was hours, and then it's gone. Now, this is what I wrote in my CD introducing the ChapmanWave methodology. The ChapmanWave concept of time frames. The concept of time frames is really one of perspective. This is slide is being covered over here. Slide 276 out of 476 slides. The further away one looks, the longer the time frame required. The closer one looks, the shorter the time frame needed. After your annual doctor's appointment, you select a date for next year's checkup. You pick the month, say July. Then the week, say the second week. Then the day, Tuesday the 12th. Then the time, let's make it 2 p.m. I know I can make it 2 p.m. Now it's out of your thoughts, done with. Well, I'd like to say that's the election's done with. But anyway, suddenly it's January. The year is not an issue anymore. Rather, your focus is on months. You're thinking, okay, in 6 months, I've got a doctor's appointment. Comes June, you're thinking, doctor's appointment next month. Now the months have been torn off the calendar and it's July, and you think, next week. Time-wise, the weeks are finishing. The weekend before your appointment, you're thinking, oh my goodness, in 3 days I'm getting a colonoscopy. It's days. And on Monday you're thinking, 24 hours from now, I'll be touching my toes, only hours away. Then while pulling into the parking lot, you're thinking, just minutes to go. That, in fact, very good, Zatel, bottoms up. And that is exactly what you want to be looking at in time frames. The reason why I say that is because there are certain stocks like Whole Foods. Whole Foods, to me, is a stock that you've got to watch very closely because it's going to tell us a chunk about what's going on. If Whole Foods has made a monthly peak, F, and it's trading at 91.19 right now, and if that 101.86 is the top, and next month sees a lower low, it starts to go even lower into the 89.88 area. The moment it takes out 81.55, I've got to be careful because I'm thinking, hey, if that's a peak F top in the monthly, and a peak F top in the weekly, and a peak E top in the daily, you see how this is working? I then say, okay, the month is going to tell me what's going on, but I had to wait for the daily and the weekly and then the monthly to give the signal. Once it gives that signal, we start working backwards and we say, where is the weekly going to find support? No, where's the daily going to find support? I'll talk about time frames more next week. Have a fantastic weekend. Stay tuned for Nico, and if you AMRN, I'll get back to you. I'll give you a text in a moment, Art. So, thank you for being here. Stay tuned.